For the benefit of the viewers, I have a question for you. Why should people invest in bonds? Bonds, as we know, are fixed income, and so are FDs. They all give fixed interest periodically. So what is the advantage people get by investing in bonds?
What you said is right, Raghu, because a lot of people, they love bank FDs because they can see the branch manager, there is a relationship, and they are seeing the bank being there in the same place from 20 years, 30 years. So there is a level of trust with the banks. But with bonds, you don't know what it is. The general public, the retailers, they don't understand bonds. But should they invest in bonds is the question. Why should they invest? You asked about two aspects. Why people are having money in the FD? One is the safety, and the second is the return. If you have two options and both have equal safety, then both have equal returns, then you don't have a choice. You can take anything. And you have a bond, let's say government security that you are investing, and you have a FD. In comparison to bank FD, a government bond issued by Government of India is much safer, probably 10x. A bank can go down, but government cannot default on its interest payments or the capital. Particularly government like ours, country like a solid financial status countries like India. There are countries which will default like Pakistan, may default like Pakistan. But in India, the government security is more safer than the bond. Now, the second question that comes is the return higher or is the return low? So, which one do you want? If you want to weigh safety over the returns, you should actually go for government securities. The question that comes is it safe? It is safe, and it is just the question of knowledge, believing in it. Once you invest in the government securities, because whatever you invest, you go through a system and you transfer the money directly to the Government of India through the ICIL corporation. So it is safe. You get your bond in the form of a demat, in your account it lies, and the interest payment comes to your bank account on the prescribed date. So if you have return higher than the bank FD, definitely you should go with government securities. If your bank FD is normally, what happens over the period of time, in my experience, the bank FD will most of the time match with the government security yield. The long term yield in India has been about 5 to 5.5%, and the FDs always go with the government securities yield, because what would banks do? They also park the surplus money with the RBI and with these instruments. You can directly buy government securities if you want highest safety, no questions about that. Other than government securities, if you are buying any other bond, you have to be very careful in analyzing the ratings, the change in ratings every time, and you must go with an advisor who knows the markets well. There are risks in every bond also. So it is very important that on two parameters you select the bonds over the FDs. One is, if you get higher safety, best is to go for government securities, and beauty is it is highly liquid. And today we are in a digital India, every transactions happens in your own account. So it is very safe to invest in government securities because of the highest safety. And if you always find, right now if you see, the yields are much higher. And once you buy a government security, you are locking the yield. If you buy today government securities, now if you don't sell it for next 5 years, the rates won't change for you, because you will continue to get the same coupon rate. Especially right now, there is a big advantage if people buy government securities in next 1 to 3 months. The biggest advantage is today India inflation is under control. The RBI has been rising the rates continuously in the last 1 year, and it has stopped in last 3 months. And probably once the takeoff comes in, the growth comes in, the RBI would not further increase the rate, probably it will stay there or reduce. When the interest rate is reduced, then the demand for bonds will increase, and people who buy government securities now at whatever 7.13, 7.2% kind of an yield, when 6 months down the line, 1 year down the line, the FD rates will become 5%, 5.5%, 6% when the interest rate reduces. It is normal thing that in any developing country, when the GDP is increasing, interest rates is likely to fall. At that point of time, this 7% looks like 20%. When you have an FD which is giving you 5.5%, if people remember just about 1.5 2 years back, the FDs were only at 4.5% in SBI and HDFC Bank. Now it has increased because rate has increased. Now there could be a reverse situation where rate cut starts happening. If you buy government securities now and hold it for next few years, you are definitely going to get the advantage of getting higher returns, even if you sell 3-4 years down the line.
Okay, so what you are saying is, since the interest rates are peaking, if you are contemplating buying bonds, this is the best time to buy bonds because you can lock in a high yield. Absolutely. Thank you, Mohan, for the insight into the bond market and the purchasing of the right bond in the right way.